In this video, we're diving into how Bitcoin has emerged as a significant political force, the implications of currency debasement, and why Bitcoin could be your hedge against global financial uncertainty. Let's get right into this. Bitcoin is no longer just a digital currency that exists somewhere at the margins of the global economic order. It has become a political force to be reckoned with. Notable figures like Michael Saylor have publicly supported Bitcoin. His company, MicroStrategy, continues to buy Bitcoin aggressively, showcasing institutional confidence. Elon Musk is sporting his laser eyes once again on his Twitter handle. And Larry Fink at BlackRock explained on CNBC how he turned from Bitcoin skeptic to all-in Bitcoin advocate. We've even heard rumors that Jamie Dimon, CEO of JP Morgan and longtime Bitcoin hater, has now started to change his tune towards Bitcoin. On the other hand, figures like Senator Elizabeth Warren have been vocal critics. However, the political tide is shifting. Lawmakers are gradually recognizing Bitcoin's potential as a legitimate asset class and a hedge against uncertainty and fiat debasement. Jack Dorsey, former CEO of Twitter, believes in Bitcoin's potential to bring financial freedom to billions of people worldwide. His companies have invested heavily in Bitcoin, and he frequently speaks about its importance. Furthermore, billionaire investors like Mark Cuban, Tim Draper, and Stanley Druckenmiller have also shown support for Bitcoin, viewing it as a hedge against inflation. Now let's talk about the 50 million US voters who either own Bitcoin or hold favorable views towards it. This is not just a statistic, it's a powerful voting bloc. These individuals are passionate about financial freedom, privacy, and self-sovereignty. They see Bitcoin as a way to protect their wealth from the devaluation of fiat currencies and government overreach. This voting bloc is significant because it represents a growing demand for financial systems that prioritize individual control over central authority. As more people become disillusioned with traditional financial institutions, Bitcoin's appeal continues to grow. This group values the principles of decentralization, transparency, and borderless transactions. The Bitcoin movement is rooted in the belief that individuals should have the freedom to control their own financial destiny. This passion is driving political engagement and advocacy, pushing for policies that protect the use of Bitcoin. Let's take a deeper dive into the problems with our money. Fiat currency is government-issued money that is not backed by a physical commodity. Instead, its value comes from the trust and confidence that people have in the government that issues it. This essentially means that governments can print more money whenever they need to. This leads to inflation and a decrease in purchasing power. Decisions regarding monetary policy are made by a small group of individuals, often lacking transparency and accountability. The Roman Empire's fall was partly due to the debasement of its currency. As the empire expanded, the costs of maintaining it grew, leading to more money being printed without any real value backing it. The denarius, a key Roman silver coin, saw its silver content reduced over time. By the time of Emperor Diocletian in the late 3rd century, the denarius contained very little silver, causing massive inflation and economic instability. Similarly, the Weimar Republic in Germany experienced hyperinflation in the early 1920s. The government printed money to pay reparations and debts after World War I, leading to astronomical price increases and economic chaos. Japan's yen is a more recent example. The Bank of Japan has been propping up the yen's value through various interventions, but the currency continues to fall. This situation underscores the inherent risks of fiat currencies and the potential for collapse. Countries like Venezuela and Zimbabwe have also faced severe inflation due to excessive money printing, leading to economic turmoil and humanitarian crises. The United States government faces a massive and unsustainable debt problem. Record debt levels, which are now nearly $35 trillion, along with growing concerns about the demand for U.S. treasuries, are troubling. If more countries begin to move away from holding U.S. dollar reserves, the implications could be severe. And we're starting to see cracks in the global financial system as we know it. The M2 money supply, which includes cash and checking deposits, has skyrocketed. This increase in money supply without corresponding economic growth leads to debasement. The BRICS nations, Brazil, Russia, India, China, and South Africa, are exploring alternatives to the US dollar for trade and reserves. They are considering creating a new reserve currency to facilitate trade among themselves, reducing their dependence on the dollar. This move could undermine the dollar's dominance and lead to a shift in the global economic order. Russia has also been vocal about its support for Bitcoin and other cryptocurrencies. Amid sanctions, Russia sees Bitcoin as a way to circumvent traditional financial systems and maintain economic stability. This stance highlights the growing geopolitical role of Bitcoin. Global uncertainty is on the rise, and Bitcoin is increasingly seen as a hedge against such instability. Its decentralized nature makes it resilient against systemic risks that plague traditional financial systems. During times of crisis or uncertainty, investors often seek safe haven assets to protect their wealth. Traditionally, gold has played this role, but Bitcoin is now seen as digital gold. Its fixed supply of 21 million coins and its existence outside of the current financial system make it an attractive alternative. Investors view Bitcoin as a hedge against inflation, currency devaluation, and geopolitical instability. Recently, we witnessed the CrowdStrike outage, which had a significant impact on stock markets, banks, and other institutions. This event highlighted the vulnerabilities of centralized systems. In contrast, Bitcoin's decentralized governance ensures that it remains operational even in the face of global disruptions. This resilience is a key factor driving its adoption. The CrowdStrike outage also demonstrated the risks associated with relying on centralized entities for security and infrastructure. When a single point of failure occurs, the consequences can be widespread and severe. Unlike traditional financial systems, Bitcoin operates on a decentralized network of nodes. This means that no single individual, corporation, or government entity can control or disrupt it. Instead, decisions are made through consensus among participants in the network. This decentralized architecture is a key factor behind Bitcoin's appeal as a secure digital currency. By distributing power across the network, Bitcoin eliminates the need for central authorities or intermediaries, which can create vulnerabilities and points of failure. The decentralized nature of Bitcoin ensures that it is less vulnerable to censorship or political manipulation. This means users have greater freedom and autonomy when transacting in Bitcoin compared to legacy financial systems. Bitcoin's unique combination of security, reliability, and decentralization has been the driving force behind its growing adoption and popularity as a premier digital currency. It will continue to play an increasingly important role in shaping the future of global finance. Countries like Saudi Arabia have also reconsidered their reliance on the US dollar. This is not surprising when the dollar-based global financial system has been weaponized through the use of sanctions and restrictions to the movement of money across borders. The petrodollar system has long been a cornerstone of global economic power dynamics, with oil-exporting nations like Saudi Arabia agreeing to sell their oil exclusively in exchange for US dollars. This arrangement has helped cement the US dollar's status as the world's reserve currency and granted America significant influence over energy markets. However, recent developments indicate that this system may be on the verge of change. Saudi Arabia's decision to allow their petrodollar agreement with the United States to lapse signals a potential shift away from the US dollar. If other oil-exporting countries follow suit and start using alternative currencies or trading mechanisms for oil transactions, it could signify a major overhaul in global financial dynamics. A decrease in the dollar's dominance as the world's reserve currency would likely have far-reaching consequences across international trade, finance, and geopolitics. While this trend is still unfolding, its implications are significant enough to warrant close attention from investors, policymakers, and businesses alike. The BRICS nations are actively seeking to reduce their dependence on the US dollar. By forming their own currency and economic blocs, they aim to create a more balanced and multipolar global economy. This shift could reduce the dollar's dominance and open the door for alternative currencies, with Bitcoin playing a prominent and central role. Russia's stance on Bitcoin is also noteworthy. Amid economic sanctions and isolation, Russia has embraced cryptocurrencies as a way to bypass traditional financial systems. This move signals a broader trend among nations seeking alternatives to the dollar-dominated financial order. Saudi Arabia's interest in Bitcoin as a reserve asset is noteworthy. Holding Bitcoin makes strategic sense as it offers an independent store of value, immune to the geopolitical maneuvers that impact fiat currencies. The potential move away from the petrodollar system could have profound implications for global trade and finance, positioning Bitcoin as a key player in the new economic landscape. And it's not just Saudi Arabia. At the Bitcoin conference in Nashville, former President Donald Trump recently announced that he would designate Bitcoin as a strategic reserve asset. This move has sent shockwaves throughout the world as other nation-states would have to play catch-up, setting game theory into action. Several factors are catalyzing Bitcoin's adoption and will likely lead to more demand and higher prices in the future. The collapse of FTX and the removal of Sam Bankman-Fried from the crypto space have eliminated significant negative influences. The German government recently finished selling its Bitcoin holdings, removing a considerable amount of supply from the market. Mt. Gox, once the largest Bitcoin exchange, is finalizing resolving its bankruptcy case. Its remaining Bitcoins are now being distributed back to these early Bitcoin adopters. These early Bitcoin buyers are likely to hold on to their coins, potentially stabilizing the market. Former President Donald Trump's recent positive comments on Bitcoin and the broader acceptance among political figures are driving increased interest and legitimacy. His announcement that he would use Bitcoin as a reserve asset will no doubt accelerate the role that Bitcoin has in portfolio diversification by individuals, corporate treasuries, and now we are entering the nation-state era of Bitcoin adoption. Other potential catalysts include advancements in Bitcoin technology, such as the implementation of the Lightning Network, which enables faster and cheaper transactions. Innovations are also occurring above the base Bitcoin layer to facilitate transactions and help scale the network. This technological progress is unfolding rapidly, attracting some of the brightest minds from around the world and substantial venture capital funding to accelerate fintech solutions. Moreover, as regulatory clarity improves, more businesses and individuals will feel confident adopting Bitcoin. The development of Bitcoin ETFs and other investment vehicles will further legitimize Bitcoin and increase its accessibility to a broader audience, including the world's largest pension funds, hedge funds, and sovereign wealth funds. Bitcoin is not just a digital currency. It's a movement reshaping the political and financial landscape. From its role in the 2024 elections to its potential as a hedge against global uncertainty, Bitcoin's influence is undeniable. As we navigate through these turbulent times, understanding Bitcoin's impact and potential is more crucial than ever. Thanks for watching, and be sure to like, share, and subscribe.